So I chose to do my presentation on depreciation rules and planning techniques for business operations. So what type of asset does depreciation apply to? So it's going to apply to a tangible asset so that you can see that would lose value over time due to deterioration or decay. It's based on its useful life. Well, depreciation isn't based, but it has to have a useful life. So buildings are depreciable because it doesn't deteriorate, but land is not, doesn't deteriorate. It gains value over time, and its useful life cannot be determined. So how is depreciation calculated? So before 1981, depreciation for tax was calculated using an asset's useful life. Now we don't do that using MACRS. So there's three methods to calculate depreciation: the 200% declining balance method, the 150% declining method, and the straight line method. So the 200% declining method is used for 3, 5, 7, and 10-year recovery properties. The 150% declining method is used for 15 and 20-year recovery properties. And the straight line method is used for 25, 27.5, 39, and 50-year recovery properties. So the recovery period assets for depreciation macros include, so 3 to 15 years, you can see it's kind of the smaller assets, like you start off with tools and then you get up to cars. And then as you get up further, it'll be real estate and these bigger office buildings. So for personal property, so we're going to use a half year convention. So that would apply for 3, 5, 7, 10, 15, and 20 years. So basically a half year of depreciation is allowed for the year in which property is placed in service or which the property is disposed of. If it's in service, then the IRS has tables so it would provide the depreciation rates, but if it's disposed of, it won't. So a mid-quarter convention would apply if more than 40% of personal properties acquired in a year is placed in service in the fourth quarter. So mid-quarter convention, this property placed in service on any day of a quarter is treated as placed in service at the midpoint of the quarter for depreciation MAC purposes. So these are just the depreciation rates if it's being serviced for a half-year convention for personal property. So mid-month convention for realty property, we're going to use that for 25, 27.5, 39, and 50 years. We're going to use mid-month convention. So 1 half month of depreciation is allowed for the month in which the property is disposed of, placed in service. Once again, if it's placed in service, the IRS has tables for that. If not, then they won't. Basically, if it's disposed, they won't. So you can see here's a couple 27.5 and 39 year. So here's a quick example. So you can see paid $38,000 for a computer. We're using the 200% double balance method. We can see use the half year here. So the rate was 40%. So it's a half year. So we do half that. So it would basically be 20%. Then the rest would be 40%. And we use the straight line for 5 and 6. There's a limited depreciation for passenger automobiles. For 2020 is 10,100. And then these are the following years. It doesn't mean the law could change, but as well, it's like the second year would be 2021, the third year would be 2022, unless the law would change. Bonus depreciation. So this is with the tax bill of 2017 under the Trump administration. So 100% of the cost can be deducted from a qualifying property that's in service after September 27, 2017 and before January 1st, 2023. So a qualifying property is depreciable personal property, computer software, and certain leasehold improvements. And also 50% of the cost can be deducted for a qualifying property if it's acquired between December 31st, 2012 and before September 28th, 2017. Leasehold cost and improvements. So physical improvements to lease property are capitalized and depreciated over the appropriate MAC recovery period. Obviously, the cost recovery rule would still apply even if the term lease is shorter than the MAC recovery period. The rule tangible assets are recovered under depreciation. So section 179, expensing election. So it's an election which firms can expense a limited dollar amount of the cost of tangible personal property placed in service during the taxable year. So it would include tangible, depreciable personal property and off-the-shelf computer software. After the 2017 tax bill was passed, it actually extended to some improvements to non-residential realty property. It's going to be attractive to small firms because they can deduct the cost of the newly acquired assets. They don't have to create or maintain depreciation schedules. But if a firm purchases more than the threshold amount of qualifying property in a year, the annual dollar amount would be reduced by the excess to the total cost of the property over the threshold. So in 2021, the threshold is $2.62 million. Basically, it means if a company would pay more than $3.637 million in qualified property for the year, then it wouldn't be a benefit to use this election because the limited dollar amount would be reduced to zero. You can also use section 179 bonus depreciation together. Thank you for listening to my presentation.